In the past few weeks, I've been deep in conversation with several developers, and I've got some exclusive insights that you don't want to miss. These could help you navigate what's going on while real estate investors are in hibernation mode. The market has shifted significantly from a few years ago, and developers are making some strategic adjustment to adapt. So, what are they thinking? And what is my prediction for the next 10 years? When the market was hot, everyone wanted to be a developer. But those days are over. Today, being a developer is no joke. Developers face all kinds of challenges: high interest rate, rising labor and material costs, and most importantly, slower sales. If they don't have the financial strength or enough sales to get project off the ground, they could find themselves in one of the three situations below. Number 1, receivership. Even if developers sell 7 to 80% of their unit, many are still struggling. Rising interest rate and construction costs have put tremendous pressure on their budgets. As of 2024, at least 27 Ontario developers have gone into receivership, a significant increase from previous years. This put hundreds of units in jeopardy, leaving pre-construction buyers uncertain about their investment. It will also slash the projected number of unit completions budgeted for that year. Number 2, cancel or sell the project. For smaller developers, it is becoming increasingly difficult to get projects to completion. When pre-sales don't reach the necessary threshold, they may have to either cancel or sell the project to bigger players. Number 3, convert condos to rental buildings. Larger developers are shifting gears, turning condo projects into rental buildings. But this move is not cheap. It can require 2 to 3 times more investment from the developer. Unlike condo projects where pre-sale deposits help offset costs, rentals needs the developer's own capital, often at high financing rate. Despite the challenges, this strategy helps them ride out market volatility and keep cash flow steady. So, what is the game plan now? With fewer investors in the market, developers are focusing more on end users who actually plan to live in the unit rather than rent them out or flip them. What do end users want? Based on trend this year, we know that they are looking for number 1, larger units. Buyers are leaning towards 900 square foot 2-bedroom instead of smaller 450 square feet micro condos. Number 2, faster project delivery. With interest rate all over the place, buyers prefer projects that finish within 2 years rather than being tied into longer commitments. Number 3, smaller boutique buildings. Developments with fewer than 200 units have seen stronger demand. A good example is Trident Royal Bayville, a luxury condo with less than 100 units per building. This kind of rare product is flying off the shelves. This shift aligns with developers' new strategies too. Remember, between 2011 and 2021, developers were all about 600 units tower to maximize sales volume. But with fewer investors now, they want smaller buildings. Smaller projects mean shorter construction times, lower interest costs, and less market risk. With 200-unit buildings, they can secure financing with fewer pre-sales, reduce exposure to market shifts, and see quicker returns. Some top-tier developers even using their own fund to complete projects before opening sales. They are able to wrap up construction on a project before launching sales. This offering buyers more confidence and reducing their own risk. Here is what I expect in the next decade. Smaller, end-user-focused projects will dominate as developers cater to those who can afford to buy now. More condo projects will either be cancelled or converted to rentals. Condo completions will taper off by 2026. As fewer projects break ground today, completion could drop by over 40% in 2027 and 2028, creating a tighter supply. With this lower supply and buyers returning to the market, condo prices could rise by 2028, especially if interest rates stabilize or drop. Post-2029, we will see fewer high-rise towers aimed at investors. Instead, we will see medium-sized condo aiming for end users. The era of investor-driven mega towers is gone, giving way to more exclusive, smaller-scale projects. So, what does this mean for current condo owners? If you own a condo, hold on to it if you can. The best time to sell might be around 2027 or later, which is around 30 months after, when inventory drops and prices start to recover. That dip in completions could be your opportunity, especially if you have been patient through the slower market. I hope this episode helped you understand strategies developers are using and what it means for you. Staying ahead of this shift can give you a real edge in planning your next move. If you want more inside info straight from the industry, don't forget to subscribe and hit the bell now.